What's going on, Monopoly family? Welcome back to the channel. No introductions needed. Let's get right into the video, guys. I want to talk to you guys about the current market conditions, prepare you guys mentally, psychologically behind picking your own stocks, because at the end of the day, investing in this current market condition is going to be psychological. You need to tap into the investor's mindset, look at what they're thinking, how they're thinking, and what the market is going to look like for the future. Because at the end of the day, when you invest in the stock market, you're speculating that the current market and the current stocks that you're buying will be worth more. So I've been seeing a lot of videos on YouTube on the top stocks you should be buying, and I'm just thinking to myself, history has told us not every stock that you buy is going to recover. For example, in 2008, the banking sector took a huge hit. A lot of mortgage insurance companies would have taken a huge hit, and here we've got even a bigger sector that we need to focus on, not just one but several. For example, entertainment, airline, and also restaurants, because they are directly impacted by the cause or the reason why the market crashed, which is the coronavirus, right? So let's put some common sense here behind our thinking and fundamental analysis, just psychological thinking behind what the market is going to look like. If you remember, a week ago, I posted a video where I talked to you about how the market is going to behave in the next couple of weeks. And since that video, the market done exactly what we expected. Dead cat bounce. So for those that didn't watch the last video, a dead cat bounce is basically where the market will get some good news about the overall stock market by a government official telling investors that we're going to bail out this company, we're going to help those that lost their jobs, we're going to find the cure, or we found the cure. So what happens is the market recovers on the day, but then it ends up coming back down because there will always be this big fear in the background, which is the coronavirus. Now guys, we still haven't found the bottom of the stock market. So like I said in the last video, for those who have invested or have been investing, you might invest now an average down, or you might wait for the market to give you an indication of a reversal, or for the dust to settle, because the dust has not settled just yet. There's still a lot to go. And let's put some facts in place here, guys. In 2008, right, the stock market crashed by 50%. Majority of stocks would have crashed by 50%. The weak ones would have lost 50% of their value or more. Here we've got companies like CCL that have lost 75% of their value since 3 weeks ago. 3 weeks ago, that's when they started losing their value. And now it's 75%. So for us to think that this crash is the same as last and compare when the market will recover is probably foolish. And sure enough, the market might recover, and not might, but will, right? Because if we say it's not going to recover, then we're basically saying this is going to be the end of humanity, right? But not every sector will recover. Not every stock will recover. For example, the airline sector, the weakest company, is most likely going to be filing for bankruptcy, because that's their customer. Direct customer is the person who's traveling. And it's been 2 weeks since, this 3 weeks now, majority of companies have lost 50% of their value. And sure enough, they might get bailouts at the end, but that's still not enough, and it's still not going to bring them back to their actual value they were at a few weeks ago. So the weakest companies is the one that doesn't have cash flow or cash reserves, and they will have to let go of a lot of of their employees, and that just shrinks the company, and there's no growth in the company. So it's going to actually make it fairly valued at the current price you see it valued at. For example, American Airlines will be $11 now. If it gets rid of employees, if it gets rid of sells its airplanes, it's going to be valued at 11, and that's going to be a fair value for that company because there's no growth. Similarly with cruise lines. Again, remember, the coronavirus, fear, and people. So the direct customer is people, right? The virus is not going to go anywhere. So even after the virus, we find the cure for it, do you think life will go back to normal? Especially when, for cruise lines, their main customers are pensioners and elderly people, who, by the way, the virus is more deadly towards them. So remember, that's common sense. So do you think, those people will go on these cruise lines risking their lives? Probably not. Even after the virus cases slow down and whatnot. there's still going to be fear. Fear of being around people, fear of being in airplanes, fear of being on cruise lines, fear of sitting in a restaurant. So business is going to be directly impacted here. Again, that is common sense. Everything else, tech, social media, online entertainment, will probably survive, right? And probably recover faster. Microsoft, Apple, and any stock that has reserves, the big names, consumer staples, manufacturing will probably go back to normal, recover faster. So these are the kind of sectors you need to be focused on. But to have these CCL, cruise lines, airline stocks, the crappy ones especially that don't have any reserves, cash reserves, restaurants that are not big as McDonald's and whatnot, will take a huge hit. And when they start shrinking down and getting rid of employees because they're not really, business is not booming anymore and we're in a recession, what do you think is going to happen? It's going to take them years to recover to the price they were at. So you just have to understand that, guys. Keep that in mind. I know you see a lot of videos on top stocks to buy and whatnot. So just do your own thinking here. And in 2008, when the market recovered, what happened was the big names would have recovered. Their competitors, it took them years to get back up and start breathing again. But at the end of the day, that is your decision to make. I'm just giving you the skill here to think and do your own analysis. Look at the cash flow, look at the financials. At the end of the day, if you want to learn more, by the way, quick note, the course is there. You can learn for yourself into more details on swing trading. So you need to look at year after year growth. Again, we need the financials for these companies to actually do our own analysis on how they're doing financially. So we're still waiting for earning reports for this quarter and the next quarter. So it's going to take a bit of time to kind of recover. Now I might sound pessimistic here, but I'm realistic. That's the difference, guys. I remember back in the crypto market, everybody was hyping up these cryptos and whatnot. And some never made it back to where they should have been, and people bought it. I've been getting a lot of calls from family Z, should I start buying, and I was like, relax. But no, they're going up. Relax. They're not going anywhere. Anything that goes up will come back down. Okay? And if they don't come back down now, they will when the earning reports come out. They will when they talk about how many employees they fired. So short-term volatility here is something that we're playing. We're as day traders, and we understand that the dead cat bounces will happen every single day. So for me to take that risk, understanding the psychology is very crucial, and that's why I always preach psychology to you guys when trading and investing. So, like I said, not every stock you buy is gonna be recovering. Not every stock you buy is gonna make it back to the top, and it might take several months to kind of go back to the actual value. The big names will recover. It will be a breeze for them. Manufacturing, social media, consumer staples will always be back up to their value. But other companies that have been directly impacted and will still have the fear of being, in their premises or around people. Like I said, this is different, guys, than 2008, because now you're dealing with people. The consumer itself, the customer, is scared to be in your premises as a restaurant, is scared to be on your planes, is scared to travel, is scared to take a cruise line. So what you gonna do here? Well, you're obviously gonna shrink your company to cut down costs, or you're gonna file for bankruptcy. It's one of those. If you don't have the money, you're not gonna survive. So these 2 weeks of shutdowns isn't enough to we still haven't seen the bottom. That's what I'm saying for some companies. For some companies you might be investing in right now, and I know I'm doing that every week. I'm adding a little bit of shares, but not everything is gonna survive. All right, gotta go. Appreciate you for watching, guys. Smash that like button if you learned a thing or two here. Follow me on Instagram if you want. Smash that like button. Don't forget, let me know in the comment sections. Let's boost up that algorithm, guys, so more people can see this. This is hard-earned cash. Do your own analysis here. Yeah. Farewell. Right, until next video, I'll see you again.